Section 13 of the training. In this section, we'll discuss how to save loss on a losing trade. In trading, one very important fact that you must face and accept is that you will not win every trade. To expect to win every trade is not only unrealistic, it's also impossible. But there are some things that we can do that will limit the loss on those losing trades. It's risk control, if you will, and this chart shows a good example of how we deal with some losing trades. First, let's identify the buy signal at about 1357 on our chart's timeline, with the blue arrow pointing to the confirmation candle. The trade is well formed, with the double bottom in price, unmistakable higher lows on our indicators, and good volatility. Well, assuming that we take this trade and we get the closing price of our confirmation candle for our fill, we would be in the market at a price of 883. We would set our 2-point stop at 881. And we would place our 2-point profit target at 885. As you can see, this trade never made it to our profit target. The blue arrow shows that the highest that price ever reached on this trade was 884.50. Whenever price moves more than 1 point in your profit direction, you can begin moving your stop towards your fill price. If the market is reasonably volatile, you'll probably want to maintain at least a 2-point spread between market price and your stop. So when price hits 884.50, we could move our stop from 881 to maybe 882. You always want to maintain at least a 2-point spread. If price were to actually touch our price target of 885, we would then move our stop to 883.25, which would be 1 tick better than break even. A tick is a 1/4 point in the S&P E-mini, and that extra 1/4 point could cover our commission costs if price went against us after hitting our price target but not giving us a fill. In this example, price went against us after only going 1.5 points, and we had a stop out. But because we moved our stop to 882, we only incurred a 1-point loss on this trade. The second we are stopped out, we must cancel the limit order that we placed for our profit target at 885. Otherwise, if price hits it later on, we'll have a live order in the market that we do not want. Here's another example of how we can possibly save a loss on a trade. Ideally, we enter trades and they go pretty quickly towards our price target, often getting there in 5 to 10 minutes. But sometimes we enter a trade and after a period of time, say 30 minutes or more, we see that the trade just isn't working like we'd hoped. It hasn't lost or we'd be out already, but price just isn't making much headway towards our price target. In this example, we enter a trade to go long at 1309 on our timeline. The buy signal is a well-formed second against the trend, and it looks good with ample volatility. Our fill is 1092.5, and we place a stop at 1090.50. Then we'll place a profit target limit order at 1094.50. Over 15 minutes goes by, and we see that price has only reached 1094. Now, over 20 minutes goes by, and the price is now back to about break even. Most of the time, if we wait long enough, price will make it to our profit target. But being in relatively long extended trades like this in a narrow range channel can be stressful. At this point, you may be looking for an early exit from the trade with a reduced profit target. Never purposely exit a trade with a loss unless you're reversing your position on a valid trade signal. But here, you would evaluate the market and measure the current range of the narrow channel that price is currently in. From a low of 1092.25 to a high of 1094, we see that the range is less than 2 points, which is actually quite narrow. If the highest price has reached is 10.94, we can take a quarter point tick from that and set a new profit target of 10.93.75. Since that's 1.5 points from our entry point, we must also move our stop to within 1.5 points or less of our entry price, which would place it at about 10.91. Never have a stop that is greater than your profit target. Here, at about 13.42, price goes through our new reduced profit target, and we would have exited from the market with a 1.5 point profit. Although that's less than we originally wanted, a lot of traders are making a fortune with that much or even less per day. Learning to cancel and replace stops takes practice, but it's a vital skill that is required to trade successfully. Constant focus is required anytime you're in the market on a trade, and that focus must be maintained until the price and target is complete and you're once again flat.
This concludes section 13 of our training. If any part of this section wasn't totally clear, then we suggest that you review the section again. And if any questions still remain, please write them down, and we'll go over those questions in the online portion of your training. If you've thoroughly understood this section, then you can proceed to section 14.